Hello everyone, welcome to your podcast. Thank you for choosing MYCPE as your partner for continuing education.
To avail your credit certificate, it is required for you to complete the entire video. Please do not fast forward the video. Otherwise, the system won't be able to capture your watch time. If you cannot go through the entire video in one go, you can always come back later and pick up from where you left off. Please note that you must answer all the review questions correctly. To access the final quiz, you'll need to watch the entire video. A minimum score of 70% on the final quiz is required to earn your certificate. The handout material is available for download in the designated section. If you have any technical questions, feel free to email us at support@mycpe.com.
Happy learning and thank you for choosing MYCPE. Let's get started.
Welcome to the Concierge CPA podcast. I'm your host, Dr. Jackie Meyer, CPA. I have Heidi Henderson with us today. She is originally from the West Coast, now in Vegas, which is a fun story that maybe we'll get to today. But she works at Engineered Tax Services as the Executive VP, which is a pretty fancy title. So I'm really excited to dive in with her, hear about cool tax strategies that they're doing, what she loves to do outside of work. Hint, there's a lot of horses involved. And yeah, so welcome, Heidi. Glad to have you.
Yeah, thank you so much. I'm so excited to be here with you. And I love what you are doing. I love what you guys have built, your firm and your podcast. And I'm thrilled to be a guest here today.
Oh, thank you so much. That's so sweet. So tell us, fill in the gaps a little bit more about your background. How did you get into what you do now? And what do you do now?
That's a great question. You know, I joke around that I'm a reformed accountant.
Okay.
So I went into accounting. I actually have a master's degree in accounting and tax. And, you know, I love numbers. I'm a very analytical person. So when I went into that space, I was very excited to crunch the numbers and, and analyze all of this stuff. When I was in college, I ended up being, I actually took a temp job. I was looking for some temp work over the holidays. I think I was 19 and I ended up working for a real estate company. It was a female-owned real estate company.
Cool.
And they ended up, after my temporary stint for 2 weeks, asking me to stay on. And so I ended up working there for about 3 years through college. And she mentored me in such a way that, it was really the first time for me personally that I had a strong, successful, financially independent woman in my atmosphere.
Love that.
And seeing that and seeing what she had accomplished and really also plugging into real estate triggered me to have a lot of interest in investing and how real estate and accounting and tax all kind of rolls together. So anyway, I did end up going into accounting. I eventually was the controller for a resort in Utah. It was so much fun. We had a golf course and a ski resort. We were doing a bunch of residential and commercial developments, and it was a really fun development project. But when it finished, it became a very typical controller job. And I found myself getting really bored. And I thought, I love being challenged. I love different opportunities. I love problem solving. And I took an absolute leap of faith, actually, because of my sister, who actually is my partner here at Engineered Tax Services.
No way. I didn't know that. Okay.
Yeah. So she led the way and she sort of dragged me along kicking and screaming. And she said, Heidi, you have to come work with me. She said, everything you're doing with tax, with accounting, with real estate and development, it all ties into incentives. Yeah. And I said, you've been there for a year and a half and I have no idea what you're doing. And she said, exactly. Well, you'll figure it out. And I thought to myself, I'm willing to take a leap of faith. I am an introvert by nature. It was a little scary to go into more of a business growth mode.
Sure.
But I thought I can always go back and find an accounting job. So why not just take the risk and try something? Well, that was about 13 and a half years ago. And so now I'm in this consulting space, and we really specialize in being extremely strategic from a tax credit and incentive standpoint to look at every opportunity for how we can deploy tax credits and incentives for investors and businesses and help them deploy those things and reduce our number one biggest expense for a business owner, which is income taxes.
For sure. That's awesome. Okay. And so what does your sister do?
So my sister and I are essentially in similar roles.
Wow.
Again, we're partners in this at this point in our kind of sphere of companies. I think we have 7 companies. In many areas, we consult with CPA firms. We do the tax credit incentive side. She's really managing all of our sales team, our internal sales. I'm managing all of our marketing and sales for all of our brand of companies, as well as a lot of business development and working with business owners directly on tax strategy. And so we work hand in hand very closely every day on really implementing all of those things.
Darn, I wish I would have had you both on. The sisters. Yeah. Do you have other siblings, or is it just you and her?
We do actually have 2 older brothers, and they don't have anything to do with any of this.
Gotcha. Yeah. Well, I have one older sister, 2 years older than me. So that kind of warms my heart that you're able to work so closely with her and that she kind of brought you into the fold. That's really neat. And so what does your day-to-day look like now? I mean, ETS, or Engineered Tax Services, has kind of decided to do a ton of partnering with accountants. I know you mentioned before we even kicked off this podcast, you're really trying to get out there more on social and whatnot. What caused that decision, or what led you down that path? And what's your day-to-day like?
Yeah. Oh man, we're just trying to keep our head above water right
Aren't
now.
we all?
You know, the biggest change is really balancing the white glove service with being a professional services firm with the change and shift we see in technology and implementing AI, implementing technology platforms and automation and tools that will allow a company to scale. That's really what we're working on day to day right now, is what can we do? A year and a half ago, we had the idea that maybe we needed to be a technology firm. And build technology to essentially do what we're doing. But as we've continued down that path, what we've come to realize is, no, that's not what we are. We are a specialty tax firm that is high level, white glove service, but we have implemented technology to create wonderful processes for our clients, to create those systemizations and automations where it's easy for them and the process is seamless, but we're not eliminating the relationship, because what we realize is that ultimately is where we're finding the value. And so the way that we started, our founder, Julio, formed this company 24 years ago. And over that period of time, probably 75% of our business comes as referrals from CPA firms.
Wow.
Now it started to shift a little bit, because as in this information era that we have, people are becoming much more savvy. There's so much more education and knowledge and platforms to teach people to be tax savvy or to be tax savvy investors. And that education is really allowing people, you know, I actually compare it to the medical space. It's allowing people to be more of their own advocate than what they used to be. And part of it also, to be totally transparent, is a little bit of a lack on the CPA industry, because we've seen so many CPA firms that have not wanted to shift into that advisory mode.
Oh, yeah, you're preaching the choir, sis.
Right, exactly. Because that's what clients want. That's what our clients want. That's what the taxpayers are looking for is, yes, I want compliance. Yes, I want my tax returns to be complete. But we want a CPA firm that's looking out for opportunities and strategies and helping us deploy or implement those. And so over the years, that's why we also have added the Growth Partnership. That is a firm that does nothing but work and build and consult CPA firms to help them shift from that compliance to advisory.
Wow.
Because there's such a lack. And in a lot of the AI CPA and accounting today, there's all of this language about needing to make that shift.
Yeah.
But many firms are saying, okay, that sounds great, but how do I do that?
Yeah, that's a great theory. How do I practically implement this, right?
Exactly. And in one of the, I think one of the most difficult times in the industry, how is that done when CPAs are so overworked at the moment and staffing is such an issue?
Mm-hmm.
They're culling many of their clients. They're having to decide who they're going to work with and who they're not. And so the thought of taking on another service line or being more strategic probably feels really overwhelming.
Mm-hmm.
But what we have aimed to do, I guess, back to answering your original question.
No, this is all really good information, but yeah.
Like off on a tangent, but we're aiming to partner with CPA firms to help them not lose or frustrate clients because they have strategic partners that they can trust, that they can rely on, that there's quality, there's rapport, that they can have someone their clients can reach out to. And it's similar how we are working with Tax Plan IQ. I mean, your platform is incredible, but it helps them also navigate those relationships to put those strategic partners in place and give them solutions so they can more easily provide that back to their clients. And in many areas, what we're doing, it kind of makes them the hero because they tell their client, hey, I noticed you bought a building this year. Let's do a cost segregation study. I think this will help you tremendously. Let's talk about passive versus active, material participation and how this is going to work for you personally. I mean, you do one study for a reasonable cost and they're saving $100,000, $200,000, $300,000 in taxes. I don't think that client's going to be unhappy with you. Right.
Exactly. Yeah. I mean, when at the end of the day, when you show that ROI, it's really win-win-win for sure. So are there like a half a dozen or so strategies that you really kind of hone in on? I know you are a preferred vendor for several of them with us at Tax Plan IQ. Ironically, this morning I had someone come to me and say, I haven't tried Tax Plan IQ yet. I'm still using BNA. I'm sorry, but I need to come look at Tax Plan IQ. I'm like, you can actually keep using BNA because we're not a tax projection software. It's so hard to describe what we do. But one of the huge benefits of Tax Plan IQ is that we have this preferred vendor area. And we're personally vetting these companies and people and making sure that we are, forming those relationships and making sure that you're getting the help that you need. And so tell our viewers and listeners, is it 6 strategies in particular that you do, or how does that work?
Yeah. Our bread and butter on the ETS side with incentives, I mean, cost segregation is one of the most broadly applicable for someone who owns real estate. So cost segregation is huge. The research and development or R&D tax credit is really dramatic for business owners or any company that's doing innovation. They're creating new products or processes. And that's a phenomenal credit to help essentially fund a portion of those activities. Also relating to real estate, we specialize in energy incentives. There's a 45L tax credit, probably the number one tax credit I see missed more than anything else. It's very specific to developers who are doing multifamily projects or single family developments, but it's a tax credit that's up to $5,000 per unit. I mean, it's dramatic.
Per square footage, right?
Yeah. So the 179D is for square footage, but the 45L is per unit.
Oh, so gotcha. Okay. Yeah. So that's what gets confusing is because there's all these kind of different little variances. That reminds me of Loki, the show. Variances. But yeah, so I actually helped a client with that credit and I just happened to hear about it from somebody. And then it is in Tax Plan IQ now, but that's all it takes is just knowing what you don't know, right? I mean, you've got to stay in the loop of these strategies and incentives, because you either are going to get it because you happen to hear about it, you took that training, you talked to someone at ETS, you are using TaxPlan IQ, or you have no idea what's going on, right? And it's just huge opportunity cost.
Yes. Well, and having the tools to put in basic information about a client and for it to populate, look, here are things that would be applicable to this particular client. I mean, I think that's, again, where the technology is beginning to really come hand in hand with helping the accounting industry better guide their clients on what might be applicable. Because you're right, there are nuances. Every single one of them has nuances. We still, and look, I almost hold back saying this, but I had a client 2 weeks ago say, well, I'm working with a CPA. I've been with them for ages. I saw a thing on YouTube about cost segregation for my real estate. I asked him about it and he says, no, you can't do that. That's illegal.
Oh my gosh.
Right. Right.
Okay, Heidi. I have to confirm this for you. So I have a Facebook group called Accounting Firm Influencers. We have about like 8,000 accountants there. And someone asked about a cost seg like a couple months ago, and someone replied, it's too aggressive. And I'm like, what? It is like crystal black and white, clear as can be when it comes to the tax law and using it in the tax code. And it's so frustrating when people spread these rumors, right?
You're so 100%. I quote this phrase all the time. In the audit technique guideline, where it talks about the modified accelerated class recovery system, makers for depreciation, it specifically says, this is the preferred method for depreciation. It is because it is more accurate. If we are depreciating carpet over 5 years, that is far more accurate than depreciating carpet for 39 years.
Yeah.
And so that is, we try so hard to get the information out because, to your point, I understand the nuances, the tax code complexities. Again, comparing back to the medical space, I always say, look, we're like a brain surgeon. Your CPA is your family practice doctor. You wouldn't expect your family practice doctor to do brain surgery if you have a tumor.
Right.
So you have to pull in the partners that have a level of expertise and understand some of these highly technical things. And the CPAs really need to be able to find trusted partners they can rely on and understand that they don't have to know everything, just high level understand basically where things may apply.
For sure. Okay. And so what does that relationship look like? Let's say an accountant comes to you and they're like, help me figure out what I can do for this client. They're in real estate, maybe those three things we just discussed, a cost seg, 179D, and what was the 45L? 45L. Yes. That's the one I always forget about. So does the accountant pay you something, or they just bring the work to you and you help them figure it out? The client covers the cost, so to speak. Is that how it works?
Yeah, typically, I mean, the majority of our CPAs just make an introduction.
Okay.
Some of them like to manage that process if they have a client that doesn't want to deal with it. Sometimes we have clients that are crazy busy. We can do a very detailed benefit analysis with very basic property information. The resources we have online now for real estate, for building materials, allows us to really look at a project and be able to come back with what would be applicable in that situation. We also have an amazing affiliate program, and the affiliate program really can help drive revenue or offset some of their compliance costs if they're going to do the review on the study when it's completed. But in most cases, they'll simply make an introduction. I request some basic information from the client. We get that, maybe a closing statement if they just bought or just purchased a building. We can take that, immediately roll that into a proposal within 24, 48 hours. And from there, we love to have the collective conversation, if the CPA is available, to say, look, we want to come in side by side with you as the tax preparer, with the client, and look at the strategy. Because here's one of the things I feel like I have to preach this all the time about differentiating. We are not a firm focused on just closing a deal. I don't want to just get the client to sign on the dotted line, pay me this fee, and we'll get this project done. We all know that there can be limitations. They, depending on their income levels, their tax rate, their activity, whether it's material participation, if they're married, if they're filing jointly, do they have W-2 jobs? There's all these parameters that ultimately determine their end benefit to doing something like cost segregation or the energy credits or any of those things. Many of the providers we've seen in the market don't go to that extent. It's just, look, here's a project. We're going to save you this much, sign here. And we always want to look, we've been in business for a long time. We do a lot of this work. I feel like I'm in the karma business, and we want to come alongside our CPA partners, make them shine, and do what's right for the client based on the timing that makes the most sense for them. We have a lot of clients. One of the biggest changes or movements we're seeing in the investing world or with taxpayers right now is the shift in figuring out how they can begin to build generational wealth. And how do we reduce our income tax liability? Short-term rentals is probably one of the strongest ways right now. And there's this large movement of physicians and other professionals looking at how, if they're married, maybe their spouse can retire or semi-retire, become a real estate professional, utilize the benefits of their real estate to offset W-2 income. Like this strategy is all over. There's all these educational platforms talking about it. So when they come to a CPA and they're saying, look, I'm learning about this, how does this work? Again, with the cost seg, maybe right now, if it's all passive, it might not make sense to do. I just had a client last week said, you know what? We can save you about $200,000 in taxes, but it's all passive right now.
Yeah.
And the wife is planning to make a dramatic change next year and will actually have material participation. I said, you know what?
You got to
I
wait.
would love to do this project, but let's do it next year.
Yep. I had the same thing happen. I had a savvy prospective client that had already done a cost seg when it was passive. In the next year, he could have qualified as a real estate professional and gotten it all like active against ordinary income. So that was a huge error, so to speak, in the fact of like timing or just not knowing when to do it. And so that's where this guidance really helps. That's awesome. So, I mean, I was going to ask what kind of sets you apart from competitors in this space, but I think you kind of just described it. I mean, you're really providing that white glove level of service, what I called at my CPA firm, we called it a concierge firm. And so we were all about that white glove level of service. I would say that the CPAs and accountants that are helping handhold the clients alongside third-party vendors and whatnot are going to bring the most value to their clients and can value price and charge the most for those services. And so I hope that people can think about, okay, well, if I'm too busy to work on this right now, what could I maybe set aside, or what lower value work could someone else do to where I could focus on this high value relationship? Because implementing tax planning is like the highest net profit margin that you can come across. I'm sure y'all know that. So I had to throw in my 2 cents about that, but that's neat. It's good that you are able to just kind of take and run with the client relationship if needed, or also work, kind of hand in hand with the accountant. Okay, cool. So what is your favorite tax strategy?
Oh, man. I mean, even though it's become so applicable, I think the cost segregation is astounding.
Yeah, it's a great one.
It's interesting, the timing of our podcast, but I think we're about to see some pretty dramatic changes in the tax code. We are facing, going forward, a large tax cliff of 2025.
Yeah.
I do anticipate that we're going to see a tax bill come through that will very likely extend 100% bonus depreciation. And that bonus applying to used property, so acquisitions of real estate, it has been, since its adoption in 2017, has been a dramatic driver of economic activity and real estate transactions. And I anticipate that coming back is going to just add fuel to the fire in the sense of empowering investors to utilize those strategies to, and it's regular people being able to become investors and buy property, buy real estate, and begin to really create that generational wealth and stack all of the incentives that might be applicable for a particular project. And we do a lot of other things, but it's just so powerful.
Yeah, I love that. And I agree. So just in case someone's listening or watching and they don't know exactly what a cost seg is, the elevator pitch version, you're taking the 39-year depreciation on a property. So, let's say you have $1 million property, you only get to depreciate 1/39th of that in simplified language each year. We're just saying, oh, well, that AC unit or those blinds or that kitchen top, those individually are like 5-year or 7-year or whatever, shorter depreciable assets. And that's when you can take, hopefully, the 100% bonus depreciation or whatnot. But the bonus depreciation has been phasing out. And it has negatively impacted a lot of taxpayers just not getting that 100%. It was a great incentive. With the timing of today, with our presidential election happening last night, this will probably, go out a couple weeks from now. But it is interesting because I was thinking QBI was going to dissipate because it does phase out the end of 2025. Now I'm thinking it's probably going to keep going alongside the bonus depreciation and a lot of other things that happen with TCJA. And that was really fun for me when TCJA hit. It was like the big tax change of my lifetime because I was born in 83, like when the last tax code change happened, like the big one. And so I was like on the forefront teaching about it and stuff. And so I'd say that's one really positive thing about this election is that I think we can probably predict the tax code changes pretty well, which is something you can't say every day. Right?
100%. And we've been fielding questions for the last year about what was going to happen with bonus depreciation. We are very active in the lobbying space. We are with Real Estate Roundtable in DC and lobby on behalf of R&D credit, amortization rules, and a number of things that have changed. We're very integral in these processes. And so the questions are constantly, what's the status? What's happening? And honestly, we've just been on hold. It's like we're in limbo for almost 2 years, particularly with R&D and with that phasing out of bonus depreciation. So I think I agree with you. I think we can probably anticipate that Tax Cuts and Jobs Act will be extended. And you're right. It's people are always, I get an interesting comment. They say, well, I heard that cost segregation is going away and now we won't have it anymore. And I said, well, it's a little bit of a misnomer. Cost seg itself, the principle has been around for 30 plus years.
Sure. Yeah.
It will always be there because to your point, we're just itemizing the deductions for this real estate to properly categorize assets. That's a accounting principle that we will likely always have. Bonus depreciation is just what it did was it gave us a steroid injection. And then it did also make it much more applicable to do cost segregation on a single family home. I mean, 6 years ago, before bonus depreciation, we didn't do cost seg on single family homes.
Yeah, I was going to ask you about that actually. Like, where do you see that threshold? Because 10 years ago, it was so hard. It was so expensive to do a cost seg study. I think things have evened out a bit there. But yeah, it's expanded the market to where even a couple $100,000 home, you can still do some of that cost seg work and get some benefit, right?
Yeah, that's been the biggest change. And that's the onset of bonus depreciation, which drastically increased the first year benefit to help offset the costs of the study. And then that, in correlation with the changes in our industry, have reduced pricing and increased efficiencies to allow us to be able to actually do cost segregation on a smaller property.
I love that.
From the question of being a differentiator, we're the only licensed engineering firm in the country that does this. And we are still doing physical site visits, but we do 500 to 600 site visits a month across the country.
Wow,
And
that's amazing. Okay.
Yeah, it's so we've built systems, and it's not automated. It's different than the calculator. It's the different than do it yourself type of a plug in numbers and have just something spit out, which is really difficult when it comes to audit support because the defense for that is very limited.
Yeah, let's talk about that a little bit. So what kind of audit support do you assist with? And what are you seeing audit wise when it comes to these tax strategies?
Yeah, I mean, they're so different between cost segregation, the energy credits, and the R&D.
Sure.
Cost seg is not a red flag item.
Yeah.
It allows even retroactive application. We can use a change of accounting method at 3115. It has automatic consent and prior consent, automatic approval. All right, so the IRS says, look, it's a timing difference. Go for it. We don't even need to review that. So very common, study. We don't see a lot of audits. We don't see an increase in audit risk over standard percentages of regular tax returns. We do see some audits as it relates to land values. Okay. And that's one thing that we always try to also consult with our clients about, and CPAs to make sure that we've got substantiation.
Sure.
We have full audit support. So if it does get audited, it just pushes right back to us, and my team of CPAs and tax attorneys will handle that and communicate with the IRS on behalf of the taxpayer.
Awesome.
To work through the details of the study. And because of the depth and the detail, even on a single family home, we might have a 100-page document with 35 pages of asset breakdowns encompassing the asset breakdowns in those reports, which the detail is great. But what a lot of consumers don't understand is why that matters is, one, you get a much higher benefit in year one because of the detail. Number two, the partial asset disposition, the ability to use the report as inventory for the life of that building. This taxpayer goes and they have to replace, like I have real estate. I bought a house a year ago. The way it works, 10 days after my homeowner's policy expired, the homeowner's insurance.
Whoopsie.
Yeah, how that goes. The air conditioning unit goes out and it's going to cost me $7,000 to replace the air conditioning. So $7,000 is a new asset. That's considered 27.5-year property. So that's new depreciation. But guess what? If I don't have the detail of what I paid for it when I bought that property, it's just going to sit there and I'll continue to take the old depreciation for another 26 years. Because I have the study, I can go back to the detail and say, oh, look there's the HVAC unit. It was valued at $5,500 in the cost seg. I can now deduct that amount because I'm now taking disposition for that now that it's been replaced. So the detail, we may not be the cheapest provider out there, but you might pay $1,000 extra for our study, but the long-term benefit of that detail and the disposition elections and the first-year benefits, all of those things are exponentially greater than what we find in some of these kind of automated systems with a high-level breakdown.
Yeah, that totally makes sense. So again, I was thinking, well, why have your team go on site still? What are the benefits of that? I think you described that really well. Do you do that on 100% cases, or is there a certain threshold that you're like, okay, under this threshold, we don't necessarily come on site?
Yeah, that's a great question. We did, after COVID, we have started to deploy virtual site visits.
Okay.
And we did get an opinion letter because there was some question on that. The IRS likes to see a physical site visit. So we have an opinion letter to support that. During a virtual site visit we typically only do it on a single family home.
Okay.
Typically within a certain square footage amount or a certain threshold, maybe, 100, 200, maybe $300,000 home, might be 1,500, 2,000, 2,500 square feet.
Okay.
A virtual site visit, recorded video gives us all of the same exposure. we record it, we have photos, we can see all of the assets, and we're still able to do that same level of detail without an actual on-site visit.
Okay. And what's like the cost of that, to think about the cost benefit going into a residential real estate?
Like the cost of a cost seg study? Yeah. On the cost seg studies with a virtual site visit, we're typically going to be ballpark about 2,500, maybe 3,000 again.
Oh, that's great. Okay. Yeah. Because 10 years ago, you were looking at 7 to 10 minimum on cost. So yeah, that's very reasonable compared to what you're getting.
Yeah. Well, and that's a great point. That's what we actually see in the CPA industry is I think this evolution of the industry and the application of this, we're still lagging a little bit with the old thought that was the same when I started doing this almost 15 years ago. Yes, we were charging, I was doing studies for $20,000, $30,000, $40,000, $50,000 that today we're doing for $7,000 or $8,000. And those are large commercial buildings. So, the pricing, because of our efficiencies and scale of economy, have really become much better. And it's so much more advantageous for the property owners.
Yeah, that's great. Okay. Love it. Love it. Love it. All right. So we've talked a lot about cost segs, which is awesome because it's a great strategy. What would kind of make an accountant say, okay, I should have ETS take a look at this? Is it anytime that real estate is involved, you're like, let's go ahead and take a look? Or are there other parameters that you would set there?
Yeah, I mean, we're pretty much, if there's ever any real estate, if it's a purchase, new construction, or any significant renovations, typically $100,000 or more, if they've done a renovation, a build out, any CapEx type project, the benefits of creating that reconciliation, the original asset, what was demoed, what was added, and breaking out those costs can be very valuable. And those renovations can also qualify for the energy incentives. So really anything with real estate, again, purchases, improvements, new construction. Okay. For the R&D side, that's much more for businesses that are doing anything that's innovative. If they are spending money, if they're building software, if they're investing in new products, if they're working on trying to figure something out to improve their business, there can be some really tremendous benefits on the R&D credit side as well.
Yeah, it's really interesting because there's some unique ways to qualify for that. Even if you're like an optometrist, but you're working on a new prescription or just very unique things like that can throw you into that R&D credit that a lot of people don't realize. And so try not to think of it as just software, right? Because there are other parameters that you can do. It's all about just the questions you ask the client, right? Like, what are you doing out there? Are you creating anything new? And can we do anything with this, right?
Yeah, that's exactly. It's taking the time to understand their business and what they're investing in. And it doesn't take a lot of time, but it does, just be interested, be curious.
Yeah, be curious.
Ask those questions. Yeah.
ABC, always be curious.
Yeah,
that's like the ABCs of accounting. I wish everyone knew that, but no.
Love that.
Okay, so as we kind of get to the end of our time together, I still have so many questions, but I want to make sure and ask. First of all, do you see certain accountants, CPAs out there really killing it? And if you do, which a lot of people don't, but I think you probably come across some because they're working with you, what are they doing that's making them kind of rise that next level? Is it the way that they price? Is it the way that they serve the clients? What makes that special something in accounting firms?
Yeah, I have seen the biggest change in the last year than I think I've seen in the last 12.
Wow, that's a bold statement right there.
I think it's because of the crunch. There's all this pain with capacity and staffing, and it's forcing people to look outside the box. And some of it, I think, is private equity and then all these mergers and, all this opportunity. So there's a realization that something has to change because this old school thought of the older style CPA firm just isn't as viable as it used to be. And some of the changes, I will tell you, I mean, I have one group that I'm working with that is, they are backed by one of the guys on Shark Tank.
Ooh.
And they are doing tons of social media marketing.
Oh, I know exactly who you're talking about.
Social media ads.
Yeah.
They are looking at doing tax planning and tax strategy. They have built a system in place to assist clients. And the other thing they're doing that this is one thing I'd never seen before, and all of a sudden it's popping up almost daily. They have actually realized we should build our own affiliate portal and begin to get referral partners that we will actually share fees with.
Wow.
And I was blown away when I saw that. You know, we've done that in the specialty tax space. But to see CPA firms starting to realize, you know what? We could be working with some of these strategic partners who can refer business to us and help support their clients. Maybe we should look at this affiliate relationship using influencers, using some of these, you know, internet gurus that are, you know, teaching and educating. And that, I find it fascinating. But between that and subscription fees, I am seeing some firms growing so rapidly. It's incredible. And I think they will start to overtake some of these other kind of local and regional firms that still hold that older style structure.
Yeah, for sure. I agree. I think there has been quite a movement this year. We're seeing it with Tax Plan IQ, where people that were hesitant towards change are just like so excited about it. And that's been really hard to find for many, many years. But I guess you could say that's one positive of all of these negative things that are happening to our industry or profession, is that it is forcing us to think outside the box. It's forcing us to look at, well, I can't work with affiliates. That's against the rules of something or other, but I don't know what. And I'm just going to go with that and think that that's unethical. But no, you go check the rules and you're like, there's absolutely nothing wrong with this. You just have to make sure you do X, Y, Z. And now even the AICPA and other big orgs are actually supporting these newer initiatives. And Heidi, I wish I had so much more time to talk to you, because I would just be blabbing about this new pricing initiative that we're releasing with one of the biggest governing orgs. It's how we price things in Tax Plan IQ, but it's called the ROI method of value pricing. And it allows the practitioner to price up front for that perceived tangible and intangible value that they're bringing to the table for the clients. And they're like 3 to 5 timesing their fees. They're putting them on a subscription, like you mentioned, you know, monthly subscription, packaged offering. It is just a substantial change for these firms. And so it's a really important thing as you're looking into doing more advanced tax planning or going to ETS and doing some tax strategies. Reevaluate your pricing model as well, because everything starts from that and then feeds from that. And you can transform your firm with those things. So sorry, I had to go on a little kick on that one.
No, it's 100%. And it's fascinating because for 15 years, I've gone to conferences and everybody's talking about, well, this idea of getting away from billable hours and talking about other changes. But the actual practice of converting from one to the next has been really difficult, and very few firms adopted that. So I think what's happening is I'm seeing a lot of people that are younger individuals that have been growing up in older style firms. They're going out and starting their own companies. And they're saying, look, it's too hard to convert this within my firm. And so I'm just going to create my own company. I'm going to start from scratch. And, you know, that pricing model, like you're saying, I think it's phenomenal to see like this refresh in the industry. And in a new generation, I feel like taking over. It's really interesting.
Yeah, it's going to be really fun to see happen. We'll see some pain, as you know, as is with any change, but hopefully it'll all come out for the better, because in the end, we all want to just help people. Even though we tend to all be introverts, you know, like you and I, we really have a passion for helping people through those numbers. And, you know, any way that we can optimize this crap that we've been going through in the profession is going to be a better thing. So Now, okay, last couple questions. One, what is one book that you would recommend to our listeners or viewers that you really love?
Oh, that's such a good question. Okay. I'll make it quick. I know we're running out of time. I have a dear friend that is a client, a CPA that I've now worked with for 15 years. And I struggled so much when I came out of accounting and was in more of a business development role.
Mm-hmm.
And he told me, you need to read this book by Daniel Pink. And it's To Sell is Human.
Okay. Yes. I've heard of that one. I haven't read it yet.
Yeah.
Okay. I'm going to add that to my list.
I love Daniel Pink, but for some reason that book resonated so deeply with me because you just nailed it on the head. I love to help people. It is what it's like what makes me tick.
Mm-hmm.
And selling, and we see it in the CPA industry, feels so yucky. And that's why so many CPAs don't tell their clients about other services because they think, well, if I tell them about cost seg and then they have to pay $5,000 for this study, they're going to think I'm trying to sell them something. And it's like, no, that's not, yeah. People understand you pay for value.
Right.
And so anyway, that book really helped me reframe the whole way that I viewed selling, if that's what we want to call it.
Okay, awesome. Yeah, I'll have to check that out for sure. That sounds great. That sounds perfect for accountants because you're right. We hate sales.
Yes.
Okay, last question. How can people get a hold of you if they want to chat more about your service offerings?
Yeah, absolutely. I mean, I'm on LinkedIn. Our website, engineeredtaxservices.com, is a wealth of information. We have tons of info on there. My contact information is on there as well as LinkedIn. Call, text, email. Hopefully you can put links in this, but my email is henderson@engineeredtaxservices.com. And would love to chat with anybody about all of this fun stuff and help wherever we can.
Yeah, for sure. So I know we have you featured as our preferred vendor at Tax One IQ on several sessions that are upcoming to our community, which is really exciting. I'm so thankful to have you on today and to meet you finally, because I'd heard so many good things from Dave Lucas, and you are just spectacular. I love you. And hopefully I can have you back someday because I've got plenty more to talk about.
Absolutely. I would love to. And hopefully we'll get a chance to get together in person sometime. And I agree. I think we could sit and talk for hours about all this fun stuff.
For sure. Yeah. We could totally geek out.
Yeah.
All right. Well, thank you so much, Heidi. Thanks, everybody. Have a great day.